Raymond James' first quarter earnings have been released just moments ago. It's been a quarter filled with a lot of uncertainty for the economy. So did they beat expectations? Joining us now in a Fox Business exclusive is Paul Reilly. He is Raymond James Financial CEO. What do you think about the numbers, Paul?
Well, David, pretty good. We had good revenue growth, beat expectations, up 4%, and good bottom line growth where we beat expectations in the midst of our largest acquisition ever. But I think the bigger story is 100 consecutive quarters of profitability. We've been profitable every quarter since Black Monday quarter of 1987, where we took a trading loss so we wouldn't close the desks to keep our clients liquid. So it's been quite a run.
Well, let's look at a slightly smaller time frame, if you don't mind. The past 3 months. The past 3 months, you've been doing extremely well. The stock has been on a very, very strong upward trajectory. Is that because of what we've been hearing about all the retail investors getting rid of their spooked fears from 2008, getting back into the market and going to people like Raymond James?
Oh, I think it's a combination of things. Certainly, we're well positioned with our investors, and any movement into the retail market typically helps retail brokerage firms. Also, because of interest rate sensitivity, any movement in interest rate up is a big impact to our bottom line. 100 basis points in short-term rates gives us about $120 million of pre-tax extra earnings. And also our positioning with Morgan Keegan. That integration has gone extremely well to date, and I think that people are putting a premium on the combined company after the integration is complete.
Now, you have about 3,000 people work for Raymond James, kind of as independent contractors, these advisors, the 3,000 advisors. What do they tell you about their business? They're the people, frankly, that tune into Fox Business, are interested in the future of the market here.
Well, you know, they're very similar. Our independent and our employee advisors have the same attitude. We treat them the same. They both kind of own their book. They work for their clients. They have no product pressures. In fact, even to our employees, we just announced a new product neutral grid where they're paid the same no matter what they sell. It's
right,
a very
but they're independent businesses,
manner, so.
Paul. That's the point, is that they have different tax challenges and different regulatory challenges. How are they doing?
They're doing very well. I think the pressure is that every few years the government looks at taxing independent contractors as employees, and so far this industry has held that off. And you know, they do operate as independent businesses, so they worry about that tax change, right, which would impact their independent status. And you know, I think the whole industry is looking at a fiduciary standard, and we want a common standard across everyone, no matter what form they do business in. And those are the two big issues, one tax and one regulatory, that I think a lot of the advisors worry about.
That's why a flat tax would work so well. But that's just me saying it. Paul Reilly, Raymond James, good to see you, Paul. Thank you. Congratulations.
All right. Thanks, David.
Thank you. Sandy?